it depends what time horizon, right? Let's not worry about what happens in the first, week, 2 weeks, 3 weeks. But over time, I think of this as two different ways. Those of us who have been in this space for a long time, it's like our IPO. We were seed investors in Bitcoin or Series A investors, Series B, Series C, and then eventually we get the IPO. So, but like the IPOs of the 90s, I think it usually does. They do pretty well, which is we'll see a lot of follow through. So I'm expecting, the same as everybody else, the kind of $50 billion over the course of the year. But there is no insanity like crypto insanity. As you know, Ran, is when things start happening, they lose their minds with FOMO and everything else.
While many people will argue that the approval of several spot Bitcoin ETFs was great for Bitcoin and the entire cryptocurrency industry, some people believe all the buzz surrounding the approvals might have been overstated. Last Thursday, the entire industry was buzzing with excitement as Bloomberg analysts Eric Balchunas and James Seifert reported that the newly approved ETFs were raking in billions of dollars in transaction volume. Both analysts also reported that the launch was a success and a definite record-breaking moment for all exchange-traded funds. However, some people are questioning the veracity of that statement due to the continuous decline in Bitcoin prices since the launch. On Thursday, Bitcoin went as high as $49,000 per coin, a two-year high for the leading crypto asset. It's dropped significantly since then and is now trading at $42,630, about a 12% decline since Thursday. According to Crypto Banter's Ran Newmer, the price decline indicates that the ETF launch might not have been as successful as expected. After the first day of trading, Ran tweeted, "The Bitcoin ETF's first day was terribly unsuccessful. Most people are reporting that $4.5 billion was traded. They are not analyzing the data. If you look at the numbers, you will notice that total trade was $4.5 billion, and GBTC was 50% of that at $2.3 billion. The GBTC numbers were majority sales and outflows due to the higher fees and the old Bitcoin being locked up. Therefore, the real numbers were approximately zero new inflows." Ran recently interviewed Real Vision CEO Raoul, who gave his outlook on the new turn of events and what this means for Bitcoin and crypto going forward. Like other prominent members of the crypto community, Pal is counseling patience and perseverance despite the price declines. The renowned macro guru also discussed his outlook on other cryptocurrencies like Ethereum and the overall US economy. Please watch the video to the end as we now bring you clips from the interview. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
There is no real precedent for a 70-volt asset that's in a roaring bull market coming to be available to every single person who owns a brokerage in the United States. So anything could happen. It could be a wild-ass bubble. I don't think it's going to be a damp squid. Look, they're all correlated anyway. They always were. They were correlated by the macro business cycle, and they always have been. So they are correlated assets, but the rebellious aspect of building a new financial system, you can either take it as, well, Gary's won and we've kind of put it inside Wall Street's walls, or we put the Trojan horse inside of Wall Street. I'll go with the latter.
Do you think that now the institutions are going, okay, we've got the Bitcoin ETF, and it's time to move on to the next one, which is logically going to get an ETF, and that's going to be ETH?
It's not the institutions, it's us lot. We're the people front running it. So we're going, okay, ETH next, let's pile our money into ETH. And that's what's going on. And that will go. I mean, I think last time I came on the show, I said, this is the next big trade, amongst the majors is this switch. And if I look at the chart pattern, it's this giant wedge over a period of time. In fact, we showed it on the show last time, this giant wedge pattern in the ETH Bitcoin cross on the monthly chart. Then, I use a lot of DMARC for my technical analysis. It gave daily, weekly, and very soon a monthly 9 count.
What do you think the probability is of an ETH ETF in the next 12 months?
Even the guys from Bloomberg who've been on top of all of this have said, listen, it's probably a 60, 70% chance that will happen. Makes sense to me. Again, if you've got the two biggest assets, just think of Gary's mind, right? Gary Gensler. His mind is, let's get these behind Wall Street. Let's give Wall Street share of this. Let's get it into my jurisdiction. Then, of course, you want the second largest asset. The rest he'll probably leave to us for a while until we get a change of SEC or whatever. But he wants to make sure that they've kind of got the guardrails around the two big ones. So I think they want it.
While Bitcoin is down about 12%, Ethereum is up by almost as much. The top altcoin is currently trading at $2,534, an 11.55% increase over the past week. This is all because of increasing optimism that an Ethereum ETF will be approved, probably even before the year ends. Though SEC Chair Gary Gensler seems dead set on not approving another spot crypto ETF, Ethereum enthusiasts are arguing that the commission will give in if another court order forces it to approve such products. You would recall that in the grayscale ruling, which the commission has revealed to be the main reason behind the Bitcoin ETF approvals, the judge ruled that there's no sense denying spot ETFs when the futures ETF already exists. This same ruling applies to spot Ethereum ETFs. Also, BlackRock CEO Larry Fink seems to be as interested in spot Ethereum ETFs as he was interested in the Bitcoin ETFs. What do you think? Do you think Gensler will be forced to give in after another long-drawn and exciting battle? Please drop your comments below while we bring you more clips from Raoul Pal's interview. This time he gives his outlook on the US economy.
So this is global liquidity from all the major central banks, the Fed, the BOJ, the PBOC, the ECB, and the Bank of England. And basically, they were all withdrawing liquidity, but I noticed that liquidity had bottomed in year-on-year measures and other forms back in. It actually started bottoming in June, which got me into starting to rebuy Ethereum in the lows there, and then fully confirmed the bottom to me in my measures in October, November. So that's when I really kind of loaded up in technology and the full crypto. And for me, that these are forecastable, readable cycles based around the debt refi cycle. So for me, that's why I've got a more extended view before a downturn than Henrik has, because I don't see any reason why it won't just continue, generally speaking, till 2025, the end of this perfect cycles we've been having since 2008. So this is the Fed balance sheet in black, and the red is 36 months forward of the current interest payments. What that's telling you is the interest payments are set to explode or are exploding because of the COVID payments 36 months ago, the COVID debt. And what we found, this is the shorter term chart, using the longer term chart since they started QE, basically all QE has been monetizing past debt. So after the 4-year cycle, they just monetize the debt, shove it on the balance sheet, start again. So it's been this endless 4-year cycle based around this. And we've got this ridiculous phase to come where they can't really manage the interest payments without doing something. Right? You can't have rates at 5% or even 4% if you're looking at slightly longer, because the maths don't work, and they've got to keep issuing to pay all the interest of the 10 trillion or whatever they have to roll over the next year or two. So, for me, that's the liquidity cycle. And you do that and assets go up because you're optically debasing the denominator, the currency. That's been my core thesis for this everything code cycle, is they've done the same thing every time. The economy slows down because rates have gone up and there's so much debt. So fine, the economy slows down a bit and they use it. It's the same time as the election cycle as well. It's all the same cycle. Bitcoin halving cycle, it's all the same time. They get interest rates down and they engineer some way of using the balance sheet. Who the hell knows how, what reason, but that's generally what they do. And that's why election years tend to be pretty good years, which is why this is why, and I'd love to hear your view, Henrik. That's why I still struggle to get bearish for 2025, because even if the economy slows in an election year, they'll just stimulate more. And that's the struggle I have, is that, if you have a blow off top and some, I've seen some of your stuff, like you could have a 1929 style thing. I'm like, I don't think you can, because they just print money and optically it debases the currency. So how do you get that?
According to Pal, all hope is not lost, and there is still a high chance that we can continue coasting along without any serious repercussions for Americans and other countries with strong currencies. However, investing is still very important and compulsory for everyone who wishes to maintain their wealth and increase it over time. However, asset classes like bonds will not rise quickly enough to make up for inflation. Popular stock indexes like the S&P will do just fine, helping you to maintain wealth without increasing it, but cryptocurrencies remain the top choice. According to Pal, only crypto and technology stocks will continue to outperform the rate of currency debasement. What are your thoughts on the video? Do you agree that AI and other fast-developing technological innovations present a solution to the world's massive debt problems? Please drop your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.